Welcome to Explain the Charts, everyone, and thank you for tuning in for our in-depth analysis of Amazon, ticker Amazon, on December 4th, 2025. Today, we have some significant news to cover that directly impacts Amazon's stock performance. Amazon is making massive investments in artificial intelligence, with plans to spend approximately $125 billion on AI by the end of 2025. And an additional $50 billion for government segments starting in 2026, primarily through its highly profitable AWS division. This aggressive AI strategy, including the development of its own Trainium3 AI chips to compete with NVIDIA and Google, has led analysts like Oppenheimer and Bank of America to raise price targets to $305 and $303 respectively. Despite this long-term bullish outlook, Amazon is currently down about 1.54% today, trading around $228.805, which indicates some short-term pressure. Let's now turn our attention to the daily chart to get a broader perspective on AMZN's price action. Looking at the full daily chart, we can observe Amazon's journey over the past year and a half, starting from July 2024. There was a notable dip in August 2024, where the stock briefly fell to around $160 after reaching highs near $190, possibly reflecting market reactions to broader economic concerns or initial earnings reports. However, Amazon showed strong resilience, establishing a solid uptrend through late 2024 and much of 2025, reaching significant highs. This upward momentum was largely fueled by optimism surrounding its e-commerce strength and the consistent growth of AWS. We can clearly see the stock rally, reaching an impressive 52-week high of $258.60 on November 3, 2025, which corresponds with the news of Amazon hitting a record high around that time. This sustained rally suggests strong investor confidence in Amazon's market leadership and long-term growth prospects, especially with its burgeoning AI ventures. Now, let's zoom into the more recent price action, specifically from late October through early December 2025, to understand the immediate market sentiment. Focusing on the period from October 28th to December 3rd, we see a dramatic change in market dynamics. On October 31st, a significant gap-up occurred after earnings, with the price opening at $250.10 from a previous close of $222.86. This explosive move, accompanied by massive volume, demonstrates a highly positive market reaction to earnings, likely driven by strong AWS performance and the flurry of AI-related announcements at the re:Invent conference. The price then continued to climb, hitting its 52-week high of $258.60 on November 3rd. However, since that peak, we've observed a clear downtrend, with the stock pulling back significantly. A notable bearish candle appeared on November 13th, showing a sharp drop from above $240 to close around $237.58, followed by a more severe decline on November 20th. Dropping from $227.05 to $217.14. This decline correlates with headlines mentioning Amazon stock down 9% as investors bet on Trainium3 AI chip to challenge NVIDIA, indicating a volatile and mixed reaction to its AI chip strategy and competition with NVIDIA. The $220 to $222 range, which served as support in late September and October, became a critical level, indicating that a break below it could signal further weakness. Conversely, initial resistance has formed around the $235 to $240 area, which the stock has struggled to overcome in recent days. Now let's delve into the shorter-term movements on the 1-hour chart to identify more granular trends and potential reversals. Moving to the 1-hour chart, specifically from November 17th to November 21st, we gain a closer look at the intraday volatility. We can see a period of relative stability around $230 to $233 in the early hours of November 17th and 18th, followed by a bearish engulfing pattern on November 19th, signaling a shift in sentiment. The sharp sell-off on November 20th, from $227.59 down to $217.15, is particularly striking. This rapid decline was likely exacerbated by the market's mixed reactions to Amazon's AI chip ambitions and broader macroeconomic concerns mentioned in the news. It was also coupled with reports of insider selling, which can often spook investors in the short term, pushing prices down rapidly. Despite some attempts at recovery, indicated by smaller green candles, the overall trend in this period was decidedly bearish. The price found temporary support around the $217 level before bouncing back slightly, showing that buyers were stepping in at these lower valuations. This support level is crucial for understanding where demand might emerge during dips. Next, we will examine the most recent price action using the 15-minute chart, covering December 1st to the early hours of December 4th, to identify immediate trading opportunities and risks. Transitioning to the 15-minute chart, we can analyze the hyper-short-term movements leading up to today. On December 1st and 2nd, Amazon mostly consolidated within a tight range between approximately $231 and $235, with occasional upward pushes during market hours. This sideways movement reflects uncertainty as investors digest recent news and prepare for further catalysts. However, on December 3rd, starting around 14:05 Universal Time Coordinated, the stock experienced a significant drop from $234.71 to $231.085 in a relatively short period, indicating strong selling pressure. Despite a slight recovery attempt, the price remained under pressure, closing the 15-minute interval near $232.20 in the early hours of December 4th. Today's news, reporting the stock at $228.805, indicates that this bearish sentiment has continued beyond the data we have here. This suggests that the key support level of $230 from yesterday has been breached, reinforcing a short-term bearish bias. Volume spikes during these drops suggest conviction behind the selling. This recent breakdown could be attributed to ongoing market skepticism regarding AMZN's AI chip competitiveness or the general risk-off sentiment due to mixed job market signals impacting consumer spending. Traders should closely watch for further downside testing or signs of stabilization at these lower levels. To recap our findings, Amazon has shown strong long-term growth, reaching a 52-week high of $258.60 on November 3rd, driven by significant AI investments and AWS expansion. However, short-term price action indicates a recent reversal, with the stock pulling back from those highs. Key price levels to watch include immediate resistance at $232 to $235, which it just breached, and stronger resistance at the $240 to $245 range, followed by the all-time high of $258.60. On the downside, critical support levels are currently around $220 to $222, and then the psychological level of $200. The ultimate long-term support is the 52-week low of $161.38. For short-term bullishness, we would need to see Amazon reclaim and hold above $232, ideally breaking past $235 with strong volume, signaling renewed buying interest. Confirmation of sustained AWS growth and successful integration of AI initiatives, easing concerns about NVIDIA competition, would reinforce this likelihood. Conversely, a sustained break below $220 could signal further weakness, potentially testing lower support levels around $215 or even $200, making a bearish outlook more likely. Continued negative headlines regarding market competition or macroeconomic slowdowns would reinforce this downward pressure. Keep an eye on trading volume. An increase during upward moves signals conviction, while high volume on declines confirms selling pressure. Also, monitor upcoming Amazon news for any major updates on AI developments or earnings guidance, as these will be significant market movers. In conclusion, Amazon presents a complex picture of long-term growth potential balanced with recent short-term volatility. Your investment decisions should always be based on thorough personal research and alignment with your individual risk tolerance. Remember, this content is for informational purposes only and is not financial advice. Thank you for watching Explain the Charts, and we wish you success in your trading journey.